Hello everyone, it's Khaled. Welcome to today's daily pitch, 6th of March 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, in addition to the geopolitical tensions that has been taking place since last week, today we have the employment data in the US. The employment data, we have the non-farm payroll and unemployment claims. Let's have a look at them here at our economic calendar. Okay, so looking at the economic data that we have today, we have the non-farm payroll. The non-farm payroll is expected to drop from previous 130K to 58K, while the unemployment rate is expected to stay stable at 4.3%. Keeping in mind that at the same time we have the retail sales numbers. So, of course, the non-farm payroll and unemployment rate will be holding more weight in the markets, but we must keep an eye on these. And in general, whenever we have economic data for different sectors in the economy, like here the employment data and here like the retail sales data, so we have higher probability to get mixed numbers. And mixed numbers, usually it's not the best or most favorable for any trader because you will not have a clear direction or a one-sided direction. Let's move on to the chart, see what is going on, and put some scenarios. Looking at the dollar index gained some strength after the geopolitical tensions, and we can see that it is breaking above the 99. We will discuss this later. As for the 10-year treasury yields, bouncing above the 4% due to the expectations of higher inflation. We will also discuss this. And the VIX, which is known as the fear index, is above the 24. And this is normal in the current geopolitical tensions. On the dollar index chart, we had this analysis before. As we said, the dollar index is moving up due to the geopolitical tensions. Investors are moving or shifting to the DXY since it is known to be as the safe haven. In addition to that, due to the increased prices in oil, whenever oil prices are going up, we will have a higher inflation expectations. So the dollar index is taking a benefit from these two. First, it's treated as safe haven. Second, due to the higher expectations of inflation, investors are pricing in less rate cuts during the year. I have shared this yesterday on our Telegram channel. The market's pricing in one rate cut. Previously, the markets were pricing in around 2 or 3 rate cuts starting from June. Right now, we have one rate cut, which is expected to be in September. So this is giving additional strength for the US dollar. As for today, with the employment data we have, if the employment numbers are better than expected, this could give a signal for the Feds that they could keep interest rates higher for longer and support the dollar bulls. I believe in this case, we could be retesting the 100, breaking above the 100 and reaching the 100.2. I will delete this previous analysis and let's move on. This is scenario number 1. Scenario number 2, in case the numbers were lower than expected, here it will trigger the fear that in case the Feds want to keep interest rates higher for longer, but at the same time, the employment data is not very good. So this will give a short pullback on the dollar index. And we could see the following. The first area I will be looking at is here at the 98.6. And in case we broke lower, I believe we could retest these highs here at the 98 flat. These are the scenarios I will be looking for on the dollar index. What will be more favorable for the market is having better than expected employment data, and this will be supporting the continuation of the current bias, which is the dollar strength, and I will be monitoring, as I said, this at the 100.2. It's a very important area. That's it for the dollar index. Moving on to, let's see what is happening with gold. Well, for gold, we had this previous analysis. We were expecting price to first thing react here. Price reacted, it broke lower, and we were expecting a price reaction at the 5,100. We had a fast initial reaction at the 5,100, which was at this level. It spiked down and then wicked up, and then it started to break lower. Currently, for the past couple of days, gold has been trading in a consolidation range. I will be deleting these, and let's have another trade ideas. Okay, regarding gold, I'm having here the 5,000 as a strong area. It's a good area. Let's mark it. And the scenarios, of course, after the data being released, understanding what are the numbers. Scenario number one, if the numbers are better than expected, this will be giving the DXY additional push. And in this case, I will be looking for price again, retesting the 5,000. If I see price action failing to break here, I will be looking for the following price movement, price reaction at the 5,130, and additionally breaking higher to the 5,200. Well, breaking above the 5,200, my next area of interest is the 5,250. I will be marking this as not a major but a minor area of interest. This will be a minor area of interest. I would like to see price retesting again the 5,250, and in case we reach this level and the price action showed signs of rejection here, I will be looking for the following once again. This is the scenario I will be looking for. So better than expected NFP, a retest of the 5,000 and then moving up. And whenever we are moving up, I will be monitoring very closely the 5,250. Scenario number two, what if the non-farm payroll and unemployment rate are worse than expected? In this case, as we said, we will see some dollar weakness. A worse than expected employment data, this will give a push for gold. And I will be looking for the following as well. These candle highs are very important at the 5,200. And in case we were able to break higher, my next target will be the 5,000, actually here, the 5,330. Okay, this is in red in case the non-farm payroll is worse than expected, and this is in green in case better than expected. Now, in case the number are really better than expected, the question is what if we broke below the 5,000? Personally, in case we broke below the 5,000, an intraday candle closing bearish, the next candle making an upper wick creating a resistance, failing to break higher, my next target will be these candle lows at the 4,860, a very important area. If we zoom out a little bit, we can see that we broke, we reacted 1, 2, 3 times, 4 times almost, and then we moved up. So reaching this level, I will monitor the price action, and I will be looking for something like this in case of rejection to take advantage of such price movement. So in general, the areas of interest we will be looking for on gold is the following. Number one, 5,000, 4,860, and in case we are moving up and rejecting the 5,000, we have the 5,200 and the 5,250. Finally, let's move on to oil. Before moving to oil, if you like our content, don't forget to leave us a like, follow and subscribe. And if you want us to analyze any currency pair, you can type for us in the comment section. We will go over it. Let's move on to oil and see what is going on. Well, as per our last analysis, we were here. We wanted to see a retest of the gap. It didn't make it. It broke higher, and it also broke above the, let's go to the 4-hour time frame. It also broke above these current levels. Of course, what's moving oil right now is the fundamentals. The main issue with oil is the closure of Strait of Hormuz, where around 20% of the global oil is being transferred to the world, mainly to the Asia and other countries. That's why we are seeing prices just breaking higher, and currently we are at the 87. I will be deleting these, and let's have a look of what is going on. It's very important for anyone looking to trade oil is to take care and be like watching the headlines, because this is what is mainly moving oil, not the fundamentals itself, not the economic data, but the headlines. Moving to the 4-hour time frame, I will be marking this level. The 87, we can see that we are currently reacting here, and in case we broke higher, we will be moving up approximately to the 91. Looking at the 30-minute time frame, the first scenario I would see on oil is the following. In case we kept rejecting here, but at the same time we respected this level, I will like to see move down, rejecting here, and then move up. This is as the first target. In case the bullish momentum continues on oil and the fundamentals are still supporting, I believe the next area of interest on oil will be the 90.8 or even up a little bit to the 91. These are the scenario number 2. And finally, in case we are able to break below here and retest these candle lows, I will be looking for such price action. So in summary, couple of areas of interest on oil. It is volatile, of course. It is changing like by the moment. Whenever you have a headline, you will see an update, you will see a spike up or spike down. That's why narrow your areas of interest. As we said, number 1, the 84.5. Breaking lower, my next area is at the 81 approximate. In case we continue the bullish momentum, I will be looking for a break above the 87.7, and my next target will be the 91 approximately. These are the areas I'm looking. So guys, that's it for our analysis for today. Hopefully you enjoyed it. Trade safe, watch out for the volume and volatility, and protect your capital. Thank you so much for joining, and we will see you soon.